Hey, good day everyone. My name is Nick Peich, and in today's video, we're going to be analyzing Shopify stock and figuring out if Shopify is a buy in 2022. Given this huge market sell-off we've seen from growth and tech stocks into more value stocks such as banks and oil companies, there's been a huge opportunity to buy these growth stocks that are beaten down. And of course, whenever we think of growth and tech in the same context here in Canada, the first company that comes to mind is Shopify. As we can see, Shopify stock has been a 35 bagger since they went public back in 2015 and has gained 1,700% over the past 5 years alone. But more recently, the stock is sitting about 40% off all-time highs from just a few months ago, now being worth 125 billion US dollars. Therefore, this begs the question, is Shopify stock a buy in 2022? Well, make sure to stick around until the end of the video when I answer that exact question. So don't forget to drop a like on the video and subscribe if you haven't already, with those bell notifications turned on so you don't miss any of our future uploads. And with that said, let's get straight into Shopify stock analysis. So starting off with a little bit of background about the company, Shopify is Canada's #1 largest e-commerce company by gross merchandise volume and the second largest in the world, actually, only behind Amazon, where Shopify gives entrepreneurs and businesses of all sizes the tools needed to create their own e-commerce platform. But over the years, Shopify has evolved to be much more than just an online store builder, where they offer some features such as Shopify Point of Sale, allowing merchants to sell in physical stores and manage their own inventory, Shopify Payments, allowing merchants to facilitate online transactions, Shopify Capital, allowing merchants to get loans to enhance their business growth, and Shopify Fulfillment, facilitating the storage and shipping of e-commerce products. As for their best-in-class business model, Shopify generates two different types of revenue, the first being subscription solutions revenue, and then the second being merchant solutions revenue. Firstly, Shopify generates subscription revenue from its different e-commerce plans, ranging from $29 per month for the basic plan to $299 per month for the advanced plan. But they also offer Shopify Plus for their large enterprise clients, starting at $2,000 per month. And as of Q3 2021, Shopify earns nearly $100 million in monthly recurring revenue from their subscription solutions business, which is about $1.2 billion annualized and growing. What you need to know is that the subscription revenue is incredibly high margin for Shopify, so if they can make this a much larger portion of their overall revenue, this will be really great for future profitability. Secondly, Shopify also generates revenue from their merchant solutions business, where basically they earn fractions of revenue off of the total GMV, or the gross merchandise volume, processed on the Shopify network. But this revenue isn't as high of margin as subscription revenue, and it also varies based on consumer demand and supply within the supply chain. So I personally much prefer the subscription side of Shopify's business model. But now let's take a deeper dive into some of the reasons why I think that Shopify could be a great long-term buying opportunity at the current prices. Firstly, Shopify recently reported their Black Friday and Cyber Monday sales for 2021, and they were quite incredible. According to their press release, Shopify announced a record-setting Black Friday Cyber Monday weekend with sales of $6.3 billion globally from the start of Black Friday in New Zealand through the end of Cyber Monday in California. This is a 23% increase in sales from the more than $5.1 billion reported for Shopify's 2020 Black Friday Cyber Monday weekend, and more than double our merchant sales from the same holiday shopping weekend in 2019. Recently too, Shopify just announced a partnership with JD.com, the huge e-commerce giant in China, where they're now allowing their 1.5 million plus merchants to start selling in China to over 550 million customers annually. Now, typically if a non-Shopify merchant wants to start selling in China, it's going to take several months for this process to happen. But now that they've partnered with JD.com, this is going to accelerate the process to only a few weeks to start selling in China. But in my opinion, this huge deal hasn't even been priced into Shopify stock, as the stock continued falling after the announcement amid macroeconomic factors, so I think that there could be a lot more upside from here. Another big reason why I'm bullish on the stock over the long term is because Shopify fully integrates with the biggest social media sites in the world like Facebook, Instagram, and TikTok. Anyone can now easily create a storefront and start selling directly from their social media page, which gives Shopify a huge advantage in terms of growing, because as we've seen over the past few years, Facebook, Instagram, and now TikTok are growing like crazy. All right, now peeking into the company financials, we can see that Shopify has been growing tremendously rapidly over the past 5 years, where COVID did have a huge impact on this. But in the most recent quarter, they were still up 46% in terms of revenue, despite having a slowdown since 2021 began. Furthermore, Shopify has a rock-solid balance sheet with cash and cash equivalents of $9.5 billion and total current liabilities of $750 million, which means they will not be needing to dilute shareholders to maintain their business operations whatsoever. Especially considering the fact that Shopify is already a profitable business and they have very high gross margins, being 54% in the most recent quarter, so that is great to see and gives you a lot of security as an investor. And as the company continues to scale their business model into many more regions and areas within the world, this should drive up their profitability over time. Another reason to love Shopify is because e-commerce trends are in the company's favor and will definitely help the company continue growing. According to Forbes, we can see that the e-commerce market is expected to expand by another $1 trillion by 2025, meaning there will be tons of room for Shopify to grow with the industry and continue gaining market share on Amazon. Over the next decade, I could see Shopify potentially reaching a $1 trillion market capitalization, and this might sound ridiculous, but it is still only a fraction of what Amazon is trading at today, so I do feel this is quite reasonable. Finally, we do need to talk about valuation, and of course, it is undeniable that Shopify is trading at a premium to the rest of the market. Even when compared to other growth and tech stocks, Shopify is trading quite expensive with a price to sales ratio of about 28 right now. However, it's important to know that Shopify has always traded at a huge premium to the market and growth stocks alike because their opportunity in the future is ginormous. Furthermore, the valuation is at about where the stock was trading back in 2019 before the pandemic ever happened, which means it could be presenting a good buying opportunity as e-commerce growth has only accelerated over the past few years. So essentially, you're getting the same amazing company at about the same price, but with higher growth because of the pandemic. All right, so now let's hop over to TipRanks, where we can find all of the analyst coverage and the price targets for Shopify stock. Currently, the average price target for Shopify stock based on 17 Wall Street analysts is 1,795 Canadian dollars per share, representing upside of about 40% from the current stock price. However, if we just consider the top 11 analysts, then Shopify has an even higher average price target of 1,830 Canadian dollars per share, representing upside of over 45% from current levels. But personally, I could see Shopify reaching the $2,000 range again once these inflation fears and many of the interest rate worries are tamed out of the market and we get a lot more buying pressure on growth stocks. But this will also be heavily dependent on good company performance, so we'll just have to see how their Q4 results come out very soon. But I do think it's possible to see that $2,000 per share range again because they were just trading at $2,140 per share only a few months ago. Either way you put it, Shopify is likely headed for higher prices in the coming months and years based on analyst expectations, but also just the fact that Shopify has rebounded off of every single dip in the past and should continue growing at very rapid rates. Overall, guys, I'm very bullish on Shopify stock over the long term, and I think this recent opportunity where the stock price has dipped by over 40% is a good long-term buying opportunity for Canadian and US investors alike. And if I had to answer the question, is Shopify stock a buy in 2022? For me personally, yes, because I can handle the volatility within the stock, so make sure that you can handle the volatility too if you plan on buying Shopify. But anyways, if you did enjoy this video, don't forget to drop a like, and if you haven't already, make sure to subscribe so you don't miss any of our future uploads. And with that said, I will see you in the next one.